Indian IT outsourcing industry is one of the biggest in the world, with a whopping 32% market share of the global IT outsourcing industry. The technology sector overall employs 4.5 million Indians and contributes almost 6% to India's total GDP. India is now known as the land of engineers, thanks to companies like Infosys and TCS going global. In fact, Infosys was the first Indian company to be listed on the Nasdaq 20 years ago, the same year that cnbctv18 launched. As cnbctv18 celebrates its 20th birthday this year, we focus on the Indian technology sector over the last 20 years. Hello and welcome to our special series, Corporate Thrones. Some of the big questions that we're asking on the show today. Despite starting around the same time as Infosys, why are many mid-cap IT companies less than half its size? How will mid-cap companies play catch-up? What are the investments companies are putting in place to be relevant? What is their blue ocean strategy? A look back and a look ahead with the mid-cap IT companies. Introducing our esteemed panel today, C.P. Gurnani of Tech Mahindra, R. Shri Krishna of Hexaware, and Sanjay Jalona of L&T Infotech. Gentlemen, thank you very much for joining me on the show today. CP, let me start with you. Tech Mahindra incorporated its business in 1986, pretty much the same time as Infosys. Yet today, Tech Mahindra is a $5 billion revenue company, Infosys at $12 billion and TCS at $20 billion. I know you approached it differently as a captive unit of British Telecom. Is that the only reason for being smaller in size?
Looking back, I think the reality is we were a one customer company till 2004 end, and it was really a joint venture which was more of a captive to British Telecom. So, I mean, due credit given to the board of Mahindra British Telecom that time, which was chaired by Anand Mahindra, that they decided in 2005 that Tech Mahindra would be now a IT services company globally. And as you know that some of us joined the company in 2004 and it's now been 15 years. We were then a $100 million company. Today we are a 5 billion plus company. We were a 5,000 people company. Today we are 132,000 strong Tech Mahindra associates spread all over the world. So if you were to, what we call in our technical jargon, checkpoint restart, I would request you to put a checkpoint on 2005.
So CP, if you had to do it all over again, would you say having an approach focused on telecom in your case worked for you?
Again, let's look at the milestones. 2004 and the board decides that they need to bring in a growth-oriented, technology-oriented, innovation-oriented culture within the organization and move from one client to multiple clients. 2004 and to 2006, we prove it to the market that we are not one-trick pony. We are not only servicing British Telecom. By the 2006, we were already servicing many telecom customers, and this company gets rechristened as Tech Mahindra. We do become from MBT to Tech Mahindra. We do take the company public, and in 2006 when we took the company public, we were one of the largest public offerings, and our belief is the market was slow at that point of time. We woke up the market. Now in 2009 end, a relatively smaller company goes and acquires Satyam. And, as they say, rest is history. And when I look back, no, I don't want to do it any other way. Sure enough, we made a few mistakes, but what is life without making mistakes? You know, we all know that we made one or two small acquisitions which could have been handled very differently, or which we should not have bought them. But I have no regrets.
Keech, if I could ask the same question to you, I want you to look back over the last 2 decades. Where did Hexaware go wrong, according to you, if at all?
See, when I joined Hexaware 5 years ago, I did a comparison. The previous decade before I joined, the industry had grown 6x, and Hexaware had grown 3.5x. And so it's what you're saying, that we did not kind of do quite as well. In that 10-year period, we were growing at roughly half of the industry. But if you look at what's happened in the last 5 years, the trajectory has changed. And the trajectory has changed. We're not growing at double the industry, but we've gone from half the industry to 30–40% higher than the industry average. But your question is, what changed? And what could we have done different? Could we have started this journey earlier? And I think the answer is yes, right? I think there are 3 or 4 factors that were behind consistent slow growth over decades of companies like Hexaware compared to, say, companies like Infosys, which you took as an example. I think the first and the foremost was quality of teams. I think kind of, at the leadership level, even at the ambition, at the ownership level, we're all different in the companies that turned out to be much larger, like Infosys, compared to what we had in Hexaware. I think that's, simply the single most important factor, the quality of the teams. Now, what that led to was 2 or 3 other important factors, that companies that stayed modest size they did not invest in creating a full set of services. They had a certain set of capabilities that are niche. They were very good. For example, Hexaware, we were very good in HCM, in PeopleSoft. We were very good in testing. We were very good in data. And we were very good in some verticals, capital markets, airlines. Those are 4 or 5 things that we did very well. And we stayed there for the most part. What we did not do was to invest in creating a full service capability. The second thing we did not do well is to invest in becoming global geographically. 4 years ago, 82–83% of our revenues were coming from North America. Even now it is in mid-70s, but 5 years ago it was mid-80s. And so there was not enough investment behind systematically expanding our global footprint. Finally, there was not enough investment behind expanding vertical market presence and vertical market capabilities. We were actually in 3 verticals. Today we're at 5, and we need to be in more. So it starts with quality of the teams, ambition of ownership, and as a consequence then lack of investment in services, verticals, and horizontals, all of which then led to slower growth.
Sanjay, Keech has said that one of the things which is needed is ambition of the leadership. In the case of L&T Infotech, what could have aided faster growth?
Prema, as you rightly said, the ambitions of the companies are very different, and the perspective and the economic conditions and the global situations that one operates in the last 20 years have been very different. And for that, we need to really look at the history a little bit of Larsen & Toubro and Larsen & Toubro Infotech as such. If you look at Larsen & Toubro, L&T Infotech, or LTI, was formed in 1997 predominantly to safeguard and ring-fence the IT talent which was getting depleted. And but at that time, L&T was a 30 billion Indian INR valued company, and the purpose that Mr. M. Nayak created for the company was to create a nation builder company. And today, if you look at the company, the valuation has turned around to close to 2 trillion Indian rupees. It's a phenomenal growth, and the priorities for the company has been very different. And I'm sure if L&T had only, and Mr. Nayak had only LTI as a company to look after, things would look a lot different.
Okay, so I guess management bandwidth is an important factor as well. Sanjay, is there any opportunity you feel you missed out on in the last 20 years?
Look, I think, you know, there are benefits of scale, and in the past, if you look at technology, you know, the scale brings in the body of work that you do with companies, and you learn and you grow your talent, leadership, and so on and so forth as you grow and do more work across the world. But the world has also changed dramatically, right? So if I were to look at the past, I don't like to look at the past, I look at in the future. But if you were to look at the past, I would have really definitely loved to build something on platforms, you know, build capabilities where we can provide a lot more to our customers in a much more meaningful way.
Well, that's a look back with some of the mid-cap IT companies. We'll get into a break at this point. We'll come back and look at the next 20 years and what lies ahead.
जो चीज जितनी अहम होती है ना, उतनी ही नजर में नहीं आती। जैसे स्टील पाइप, देश के हर हिस्से, हर घर में दिखेगा, हमेशा दिखेगी आपको एपीएल अपोलो स्टील पाइप्स की अनदेखी ताकत, जो मजबूती दे रही है आपको, देश को। एपीएल अपोलो स्टील पाइप्स, देश की अनदेखी ताकत।
Accounts with common passwords like 12345, password or name and birth dates are most prone to get hacked or misused. The key to keeping your online investment account safe and secure is to frequently change your unique alphanumeric passwords and not to write it anywhere.
सुरक्षा।
सोच कर, समझ कर, इन्वेस्ट कर।
NSE द्वारा निवेशकों के हित में जारी।
IMGC and cnbctv18 present India Mortgage Leadership Conclave.
I think the thing I like the best about the conclave was the positive attitude given the economic environment. Everybody sort of can intellectualize what's going on, yet they know it's going to get better in the future, and this is a time to take advantage of change. I think going forward, as India matures on the mortgage finance side.
Brought to you by IMGC.
Tap to pay with Visa. Just like that. No PIN or signature required up to Rs 2,000.
Welcome back to Corporate Thrones. Still with me is C.P. Gurnani of Tech Mahindra, Sanjay Jalona of L&T Infotech, and R. Sri Krishna of Hexaware. Keech, I want to talk about the growth in the coming years. If a mid-cap company wants to play catch-up, it can't just happen by growing by a couple of percentage points more than the industry, especially when half your business, the legacy business, is flat. So it's important for the growing business, the digital business, to see double the growth rate of the large caps. How will this catch-up take place?
Yeah, so it's kind of good to define what does catch-up mean, right? In some ways, we are already caught up. The first dimension of catch-up is if we are competing in the same customer, are we in a position to win? And the answer is yes, as it stands today. On a daily basis, weekly basis, we coexist in many of our top 20 customers. In fact, a vast majority of our top customers, we coexist with other larger players. And on a daily, weekly basis, we are competing with them, and we win more than our fair share. The fact that we are growing faster than them means that we are winning and we are taking market share away from them. So that's really the first dimension of catch-up. And what does that reflect? The fact that we are winning. It reflects the fact that our capabilities, the quality of the teams that are in front of the customers have caught up. What is the second dimension of catch-up? Are we able to offer a full scale of services? if a customer, can we service everything that a customer wants? And I think there we still have some ways to go. I don't think we will ever be, let's say, TCS. TCS can probably do everything for every customer, but that's not needed. I think even in the next 3 to 4 years, we will be substantially caught up on service capabilities in terms of offering a very full range of services. The third dimension is geography. Are we present in, every country around the world? I think that dimension is going to take us probably a decade or more to kind of be fully global. We are a lot more global today than we were, both in terms of customers we service, but also in terms of our delivery network presence. But we still have a long way to go. I think that is a horizon that will take us 7 to 8 to 10 years to catch up. All of this will then translate to catching up on size. So what do I think is size? We don't have to be the same size for us to have caught up. I think what is essential is that we are substantial size. We are going to be independent forever. We are going to be financially stable, make enough money to invest back into building services, into our communities, into our employees, into our customers, and be able to service most needs of most customers globally. And I think that we will be there, in the next 10 years for sure. That need not mean we'll be the same size as Infosys. I don't know what size Infosys will be, but we will be on our own, substantial, diverse, global, financially stable, be able to service most needs for most customers.
A term that I like a lot is blue ocean, going where others have not gone. And big companies like TCS are always thinking of expanding their target market. So for instance, they were first to get into Latin America from North America, or expand into continental Europe from UK, and now even into Japan. CP Telecom for you was a differentiated offering compared to peers. So in a way, it was your blue ocean strategy. What's next?
We have chosen, number one, when everybody else was talking financial services and healthcare, Tech Mahindra chose to be that blue ocean by being only in telecom. We also looked at when telecom, part of the practice started becoming red ocean, we said network services will be our blue ocean. So we did go into blue ocean. So we work with a lot of startups. We call it a TechM Next program. So established players like SAP, Microsoft, or an Oracle, and a startup ecosystem, bringing in new value propositions for Tech Mahindra to serve its customers.
Keech, to talk about the next leg of growth, HCL Technology adopted this blue ocean strategy as well by getting into the infrastructure management services. And you were in HCL Tech when that decision was taken. And now, HCL Tech is known for its IMS services. Have you thought about what your blue ocean strategy will be for Hexaware?
I think the way we think about our business is that using the more traditional levers of growth, which is expanding service lines, getting to new markets, which is either new verticals or new geographies, we think we can sustain, organically growing 30 to 40% higher than the industry. We've been doing that for 5 years now, and we think we can sustain that forever. We think we can add to that maybe 2 to 3% on acquisitions. So that's about 15, 16, 17% growth. Now, what could go on top of that is a completely new avenue, a new service line. IMS actually is perhaps the last such new service line for the industry. And if you think about it, IMS was almost 20 years old. It's certainly more than 15 years old. And we are constantly, as Hexaware, in search for what that could be. Frankly, I don't think it is going to stay in the strict realms of what we define as IT today. I think it is going to be a business which is created by or enabled substantially by IT, but not an IT business. That's what I know. I don't know what it is specifically. Let me give you an example. Education is an industry that is substantially, transformed or has a potential to be transformed by IT. Healthcare is another industry that has a substantial potential to be transformed by IT. So I think it is going to be in that form and shape. It won't be in IT itself, but it's going to be using IT to enter another business.
Okay, so that's your blue ocean strategy. Sanjay, you once said that products and platforms is a missed opportunity for you. Is that something you would be looking at in the future?
The future belongs to those who invest in the right products and platforms, right? And this is what we've been trying to do with our Mosaic suite, right? How do we actually take the product and platform upstream, be relevant, and be able to provide time to market advantages to the customer? One is to build products and platforms yourself, but also to use industry standard platforms in the marketplace to help guide the customers to be competitive in their respective areas a lot faster. For example, we did not have any core banking capabilities maybe 3 years back, but we acquired 2 small acquisitions in Europe, and suddenly in using Temenos as a product platform, which is one of the fastest growing core banking platform, we are relevant in that ecosystems for our customers. Or use Guidewire, Duck Creek to be relevant in the insurance sector, or use AWS and Azure as predominantly 2 vectors, or GCP, and be relevant in the IaaS and PaaS kind of thing. So I think it's using these platforms in a more meaningful way and doing customers and impacting their businesses to help them get into adjacencies of the businesses is what is most relevant for us, and that's what we are focusing on.
Sanjay, I can't talk about the future and not ask about a potential Mindtree and L&T Infotech merger. While you may not comment on it, I just want to understand how important is scale going to be for you to compete in the future?
I want to be clear that larger companies have an advantage in terms of the body of work, right? If you look at our entire company, will probably be 1/5 the size of larger companies' BFS practice, right? Our entire company. So definitely there is an advantage that you get with scale, but the way the programs are being executed the deal sizes have come down, the way the new technologies are helping customers do things in much shorter time duration with much smaller teams in an agile way, it's helping us to do and be competitive in the world in a much more meaningful way, and that's resulting in our ability. If you really look back in 5 years, we have literally doubled the size of LTI, right? Not nearly about, right? And that we are able to do simply by investing in capabilities, because customers who used to source for scale in the past are actually sourcing for expertise. That's a remarkable change that we have seen in the marketplace.
And Keech, would you see value in merging NIIT Technology and Hexaware?
No, I don't think there's value in similar size companies merging for scale. I mean, you see even the most recent headline of DXC wanting to divest some of their businesses. They're divesting a quarter of their business. Now, they've gone through a cycle of mergers with similar organizations. DXC was formed as a result of HP Enterprise Services and CSC Business. In many ways, similar businesses. There's not a lot of value that came from that. I'm not a big believer in that. I think, every acquisition dollar that we will spend will go in acquiring new capabilities, not in merging with substantially similar capability organizations.
Sanjay, moving beyond the topic of scale, how worried should we be about supply-side constraints? Because it appears that protectionism is here to stay and costs are going up.
I think and this is not an event which is going to happen. It's been happening in the last few years, where the cost of on-site resources have gone up. and they will continue to get up. It's a simple supply and demand issue. If you don't have talent coming onto the marketplace, if there are not enough students in the world markets where we operate in, and you don't have the ability to bring them up at a competitive price, the prices are going to go up. But there are things which you can manage, and there are things which you cannot manage. The things that we can manage is what is our on-site ratios. So if you really look at it, in the last 4 or 5 years, our on-site ratios, we've been able to bring it down to 21.5%. That, automatically has a lesser impact on the industry, on our company. We have to hire less people at on-site. Second thing which you do is tie up with the universities here, and you start building small centers and hubs of your employees and train more people. So that's what we've been doing. The third thing which we need to do is, and I think this is where the Indian IT industry is going to remarkably change, is that maybe there will be more shifts in times to come. There will be more use of technologies. The video conferencing, the cost has really dropped. How do you use video conferencing to even do more work offshore? There are many technological interventions that will come in. There will be some interventions that will be required for you to hire people very differently, train people in local geographies, and find other alternate ways of doing businesses as well. And these are the things which we'll all have to deal with. But definitely the cost of on-site labor pool has gone up because of all the measures you talked about.
CB, just one final word. If I were to invite you for CNBC TV 18's 40th year celebrations, where do you think Tech Mahindra would be then?
As I said, we will grow faster than the industry over the next 5 years. I think you just need to watch the space.
Gentlemen, it was a pleasure speaking with you. Thank you so much for your time.